Is the property and casualty exam hard? Welcome to the quiz. Identify the type of risk that is ideally suited for insurance. Is it A, pure risk? Or B, speculative risk? C, business risk? Or D, investment risk? The answer is A. Pure risk is ideally suited for insurance because it involves only the possibility of loss or no loss, no gain, such as fire, theft, or injury, making it fortuitous and measurable. Speculative risk involves gain or loss, e.g., gambling, and is uninsurable. Business and investment risks are often speculative. Because pure risk has only loss potential, this is correct. Next question. In general liability, what does occurrence mean? Is it A, an accident including continuous exposure? Or B, only a sudden accident? C, intentional acts by the insured? Or D, claims made trigger? The answer is A. In general liability insurance, an occurrence is broadly defined as an accident, including continuous or repeated exposure to substantially the same general harmful conditions, that results in bodily injury or property damage neither expected nor intended from the standpoint of the insured. This definition is intentionally wide to include not only sudden, single events, but also gradual processes such as ongoing pollution, repeated water intrusion, or cumulative noise exposure that eventually cause harm. Limiting it to only a sudden accident would exclude many legitimate claims involving gradual damage. Intentional acts are specifically excluded under most policies. Claims made is a different trigger used in professional liability policies where coverage applies only if the claim is made during the policy period. Because occurrence covers both sudden accidents and continuous exposure leading to injury or damage, this is the accurate definition. Next question. Under a business owner's policy, BP, which coverage is typically included? Is it A, commercial general liability? Or B, workers' compensation? C, professional liability? Or D, aircraft liability? The answer is A. A business owner's policy, BP, is a packaged policy designed for small to medium-sized businesses that combines property coverage and commercial general liability, CGL, coverage into one convenient contract, making commercial general liability a standard included part to protect the business against claims of bodily injury, property damage, or personal and advertising injury caused by business operations or premises. Workers' compensation is not included in a BP because it is a separate line of insurance required by state law for employees and is usually purchased as a standalone policy. Professional liability, errors and omissions, is also separate and needed for service-based professions, not bundled in a BUP. Aircraft liability is a highly specialized coverage for aviation risks and is never part of a standard BOP. Because commercial general liability is a core component of every BP, protecting the business from third-party liability claims, this is the correct answer. Next question. What does additional insured mean? Is it A, party added to policy for specific interests? Or B, new named insured replaces old? C, insurer's agent? Or D, claim adjuster? The answer is A. Additional insured status adds a party, e.g., landlord, vendor, to the policy so they are covered for liability arising from the named insured's operations or premises. It does not replace the named insured, is not an agent or adjuster. Because it provides coverage for specific third-party interests, this is correct. Next question. A boiler and machinery policy covers. Is it A, mechanical breakdown of specified equipment? Or B, general property damage from fire? C, software failure? Or D, employee injuries? The answer is A. A boiler and machinery policy, now often called equipment breakdown coverage, covers sudden and accidental mechanical, electrical, or pressure-related breakdown of specified equipment such as boilers, furnaces, air conditioning, refrigeration, and electrical systems. Fire damage is covered under standard property. Software failure is cyber or data coverage. Employee injuries are workers' comp. Because it covers equipment breakdown, this is correct. Next question. Identify the standard minimum limit for auto liability under a financial responsibility law. Is it A, 25/50/25? Or B, 100/300/100? C, 15/30/5? Or D, varies by state? The answer is D. The minimum auto liability limits required by financial responsibility laws vary by state, as each state legislature sets its own minimum bodily injury per person/per accident and property damage limits that drivers must carry to register a vehicle or satisfy post-accident requirements. 25/50/25, 25,000 per person/50, 000 per accident bodily injury, 25,000 property damage, is common in many states, but not universal. 100/300/100 is a higher common limit, but not the minimum everywhere. 15/30/5 is an older or lower limit used in some states in the past, but not standard now. Because minimum liability limits are established individually by each state's laws and can differ significantly, some states have very low minimums, others much higher. The correct answer is that they vary by state. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.